Here's the hourly price chart for Intel Corporation, stock ticker INTC. Here we can see that the stock is falling victim to the broader sell-off that's occurring throughout the market today. We're seeing a very significant amount of selling pressure throughout all of the Mag 7 stocks. The major indices are trading under pressure. The S&P 500 is trading lower. The NASDAQ is trading lower. It's much more difficult to find a stock that is not falling victim to these selling pressures, rather than one that is standing up in the face of all this bearish activity. So currently, what we have here is now a double top, which has started to develop. This is a bit of a concerning price point here. We will have to watch this going forward. However, we were pointing out some potentially erratic price behavior in this chart, which did signal that we could start to see some declines here. In particular, we can point to the fact that there was this upside trading gap here. And this is a significant event because we will need to see this price gap filled if we do cross back into this territory. And then in addition to that, very short time later, we had a highly erratic, trading bar here, where prices really spiked higher, but then sold off quite quickly, and then closed near the lows. So it's a very strange candle within this broader formation here. You've got mostly upside trading activity, but then you've got this ominous looking red candle here. These were negative signals. These were suggestions that we could start to see some increase in volatility here. And it does look like this is what is occurring today. Currently, what we're seeing here is a price sell-off here in the stock after posting highs, which came in at roughly 35.15. So we have broken the 35 level fairly convincingly, but we have failed here essentially at two separate price points during two separate trading sessions. So overall, this is going to be the line in the sand to watch here going forward. We are going to need to see a break of this price level eventually, if we're going to hope to have a sustainable uptrend. So currently, what we're looking at is the fact that we have broken through this 20-hour exponential moving average. That's the yellow line here. And we're quickly coming into contact here with the 50-period EMA. But this has not quite happened just yet. So we will need to see if we're able to kind of garner some price support here. Currently, this comes in just above the $33 level, roughly $33.05. And this is essentially the only thing that's holding up this stock from breaching back into this price gap trading zone. So that would be a bit of a problem here because we could see a price decline of roughly 90 cents if this were to occur. But all of this said, we do have to take into consideration the fact that, this is not a stock specific story. This is not an Intel specific story. I've just posted videos on NVIDIA, Apple, Tesla, Meta platforms. These stocks are all seeing very negative trading days. So it's very clear that that the selling pressure is being directed throughout the market as a whole, and specifically within the technology space as well. So, it would be more strange if Intel was not falling victim to these downside price pressures. This is really to be expected. So the question is just, how far will prices fall, before we start to see a meaningful, formation of support zones that is able to kind of quell this recent selling pressure. So I do want to remain mindful of this price gap zone that we've pointed out here. But in addition to this, we can do some Fibonacci retracement analysis here and try to get a sense of where we are currently trading within the broader influential price trend, this dominant price trend that we've seen recently. So if we're going to do this, we would want to first look at the price lows that started to form on June 27th. Which came in at just below $30.30. And then we can extend this to the price highs, which were posted at $35.22 during that strange spiking trading session on July 9. So if we're doing this, we can see that, we have fallen through this 23.6% retracement fairly quickly. It didn't take much effort to do this, even though we did have the rising 20-period exponential moving average kind of adding to this support zone. So this was a fairly significant downside break. Um, further below here to the downside, we can see that this 50-period EMA is kind of rising rapidly here, and it's ready to start coming into contact with this 38.2% Fibonacci retracement. Unfortunately, we're not quite there yet. I mean, it would be more helpful if this moving average came in contact right now with this 38.2% retracement. That would sort of solidify the region, and give us another reason to expect to see support near this level. However, currently all we really have here is this 38.2% retracement, and it may not be enough to hold prices from falling lower, given the broader context here of what we're seeing overall throughout the technology space. If we do break below this 32% level, it's possible that we could find some support here at this 50%, at this 50-day. Sorry, I keep doing this. This 50-period exponential moving average. This is an hourly chart, so it would be the 50-hour exponential moving average. But it's not really clear that this is going to, be enough to catch prices here. What you would really want to see is more of an alignment with these technical signals, and we're not really seeing that here. So we can't really be surprised if we do continue to see price movements lower. From here, we start to enter into this price gap zone once we reach the 50% retracement of this broader move. So this current move comes in at 32.75. Will it be enough to keep prices really, from falling into this price gap? It's technically possible. You could see a bit of a price bounce here, but it's a bit of a concern because I don't really see much of an alignment with all of these technical signals. So while it is possible that any one of these could catch the market here and sort of stop prices from moving lower, I'm just not seeing a lot of alignment here, which suggests that this is highly likely to happen. All of that said, we do need to also take into consideration the fact that we were trading in overbought territory on the hourly chart. So we were trading at roughly, the relative strength index really did move above the 85 level, which is heavily overbought. I mean, we're approaching extreme readings at that point. Any reading above 90 would be considered to be extremely overbought. And we did cross over this 86 level. So overall, I wouldn't be too concerned here. We did need to work off some overbought indicator readings, and then we do have, in addition to this, we have the fact that the broader market is selling off as a whole. The technology space is selling off as a whole. And so some of these declines are to be expected. So here's the current market analysis for Intel Corporation, stock ticker INTC.